Hello everyone, welcome back to my channel. Mutual fund investing is one of the most convenient ways of investing in the stock market. A person who lacks the knowledge or time required to do research about individual stocks can invest in mutual funds. By paying a small fee, you can get your desired fund manager and his or her entire team to manage your money. However, most people get returns lower than what they should actually be getting. In this video, I'll be discussing how you can enhance your mutual fund returns without putting in any extra effort. Firstly, let me introduce a term, expense ratio. Mutual funds take money from investors and use that money to buy stocks and bonds. It basically acts as an intermediary that enables people to invest into the stock markets indirectly. A mutual fund has to incur various expenses to facilitate this process of taking investor money and investing it on their behalf. They have to pay salaries of fund managers and other employees. They have to spend money on advertisement. They have to incur brokerage and other charges for buying and selling of securities. There are various other expenses that a mutual fund has to incur. A mutual fund recovers these expenses from the unit holders, that is, the investors whose money they are investing. This recovery of expenses is in the form of expense ratio. Let me explain this with a very basic example. Let's say you invest rupees 100 into a mutual fund that has an expense ratio of 1%. The mutual fund will charge you 100 rupees into 1%, that is 1 rupee per year for managing your money. As your investment amount appreciates, the mutual fund applies the expense ratio to the appreciated amount. Say for example, your 100 rupee investment appreciates to rupees 200. Then the 1% expense ratio will be applied to 200 rupees. That is, you will be charged 2 rupees per annum. So, higher the expense ratio, more will be your cost. If the expense ratio is very high, then your returns will be lower because a part of your returns will be paid to the mutual fund. Out of all the costs that are included in the expense ratio, one cost is avoidable. That is commission. Let me give you an example. Say there is a mutual fund house XYZ. XYZ launches XYZ large cap fund. This fund will have two variants, XYZ large cap fund direct and XYZ large cap fund regular. Investors can invest in the direct variant of this fund through the mutual fund's website or branch. The mutual fund will not incur any additional expense for getting investors in this case because it is their own website through which they are distributing the fund. However, in case of regular fund, they will distribute it through brokers, advisors, distributors, etc. These middlemen will charge a fee to the fund house which will then be recovered from the people who invested in the regular fund. So, direct fund investors don't have to pay commission charges, while regular fund investors will have to pay it. Both the funds are exactly identical. However, the regular fund will have a higher expense ratio due to the commission charges. So anyone who has been investing in the regular variant of a fund can switch to the direct variant of the same fund and save money without putting in any extra effort. There are numerous easy to use applications that enable direct mutual fund investing. You cannot control the returns that you get. However, you can definitely try to reduce your costs. Savings in cost is as good as getting higher returns. Now, one very important point. A lot of financial advisors advise their clients to invest in regular mutual funds. This is because they get recurring commission income. If you want the same financial advisor to manage your money, you can ask them to charge a one-time flat fee and switch your regular mutual funds to direct mutual funds. This way, you won't have to pay a recurring fees forever. This is better for you because if you keep paying commission charges on your regular mutual funds, then your returns will be lower in the long term. It is better to give a one-time flat fee. As a learning exercise, you can compare the expense ratios of direct and regular mutual funds. The data is very easily available on the mutual funds website. If you have any doubts, then you can ask them in the comment section. I would be glad to answer. If you have any video suggestions or you want to discuss any topic with me, then you can connect with me on social media. I've put the links in the description box. If you liked this video, please give it a thumbs up and subscribe to my channel for my upcoming videos. Do share it with your friends and family who might be interested in finance. Stay tuned. Thank you.